Welcome back to Rebuilding the Trader Within. Let me set the tone for this episode. You see, this one's going to run a little longer than usual, and it is happening for a good reason because we are not just scratching the surface this time around. We are going even deeper into that critical space between entry and exit, that zone where most traders unknowingly lose their hedge, not because of bad analysis, but because of what's going on inside them. So you want to stick with me on this one. Also, if you missed episode 3, please pause and go check it out first. What we're about to unpack here builds directly on that foundation, and without it, the weight of today's message might not land fully. You will find the link above or in the description below. In the last episode, we looked at why we trade the way we do, not from the surface, but from the inside out. I also went on to talk about how unspoken needs like the desire to feel in control or worthy can quietly influence our trading decisions. If you connected with what we explored, you would know this is not just about mindset or motivation. It's much deeper than that, because even when you understand your patterns, even when your plan is solid, there is still this gap between knowing what to do and being able to hold your ground while the trade is live or active. That space between entry and exit, that's what this episode is all about. Let me just be factual and plain with you. Most traders don't blow their accounts because they got the analysis wrong. They blow it because they couldn't hold the discomfort, the waiting, that slow pullback that tests their nerves, or that spike in the opposite direction that makes their heart skip. Of course, they know where the stop loss is, they know the plan, but what they haven't learned is how to stay with themselves through the emotions that rise in the space between entry and exit. And that's why I usually say this: your risk capacity is psychological, not mathematical. I have had trades that I knew were right, both fundamentally and technically, but I still closed them too early or managed them poorly. Not because of the chart, but because of what was happening in me during those trades. So, what does emotional capacity really look like? It's not just about sitting still or trying to look calm. It's about being able to hold a solid trade even when it pulls back temporarily and your mind starts whispering doubts. It's staying grounded through those slow, uneventful candles without getting jumpy or bored enough to click around and sabotage your plan. It's watching price play around with your stop loss and still being able to breathe without panicking or moving your levels out of fear. It is also about what happens after you win. Can you stay present? Or do you find yourself chasing the next trade like a gambler trying to ride the high? That's what I mean by emotional capacity. It's not a checklist, it's a muscle. And most traders don't even realize how weak that muscle is until it gives out right when they need it most. The pressure to close a trade early is not just a lack of patience. It's often a nervous system that's maxed out. When your capacity is low, every movement feels urgent. You are not trading anymore. You are just trying to escape discomfort. There was a time a couple of years into my trading journey, I think somewhere around 2020, when my wife and I pulled out $5,000 from our children's savings. Had been trading smaller accounts around $1,500 thereabout and doing fairly well. So I felt I had a handle on things. So I convinced myself maybe now's the time to scale up. Maybe this is the opportunity to grow faster, make something significant out of all this effort. But the truth is, I wasn't ready. And you guess right, I blew the account. Scenarios like this happened a few more times after this experience, not because my setup was wrong, not because the market was against me, but because I was trading under pressure. Pressure to turn the money into school fees, pay the bills, a vacation, maybe a new life for my family. The thoughts ringing in my head weren't about setups. They were about what failure will mean. In fact, I was unconsciously caught in this survival loop. If I lose this, what will I say to my wife? What does that make me as a man? What does it mean for the dream we've built in our heads? You see, I wasn't trading my plan or setup anymore. I was trading my identity, my worth, my future. That's when I realized something important. It wasn't the $5,000 that broke me. It was the fact that my nervous system wasn't built to hold that level of emotional weight, especially when I had an interest to protect in an uncertain environment like the financial market. My capacity hadn't grown enough to sit with that kind of discomfort, and so it collapsed. I had to stop and ask myself, why do I trade $1,500 accounts effectively, but as soon as I go beyond that, I fall apart? That question led me to one of the biggest turning points in my trading and personal life. You see, each of us has a ceiling to our psychological risk, a point where your emotions become too loud to ignore. And unless you grow into that ceiling, you will keep breaking at the same point, no matter how strong your strategy or plan is. This was a big realization for me. Every time I grew my account close to that invincible ceiling, that emotional capacity, something will shift, not on the chart, but inside me. I'll just start unconsciously making choices that will chip away my gains and pull me back down again. It becomes a cycle. And if you are not aware of what's really going on, you will think it's about strategy or market timing. But it is not. It's a loop. And the real barrier isn't out there. It's in your nervous system. It's a mental and emotional block. You simply can't expand beyond what your system hasn't been trained to hold unless you heal what's constraining it. This is where inner work comes in. You listening to this right now might have your own number. Maybe it's $50, maybe it's $100, a $500, or even a $10,000 account size. There is no shame in where you are at the moment, but you need to know, acknowledge, and respect that number. Then work with it, not against it. Start small, stretch gently, and as you grow, don't just grow your capital, grow your capacity too. Because in the end, your edge isn't just in your strategy, it's in your ability to sit with risk without losing yourself. You only grow by gradually exposing yourself to controlled discomfort. Just like weight training, You don't start with a 100 kg dumbbell or barbell. You build reps with what you can hold until you can hold more. Same thing in trading. And I want to share a few personal practices that have helped me build that inner muscle, not overnight, but steadily. Sometimes I journal after trades, not just what I gained or lost, not the numbers, but the emotional data, what I felt during and after the trade. That's where the real data is, the feeling. Before each session, I also try to do a bit of breath work. I shall expand on this in my subsequent episode. Just 2 or 3 minutes of quiet centering to calm my system before trading. I've also learned to trade less frequently. Not every opportunity is mine to take. Some days, protecting my energy is the win. And maybe the most transformative habit of all, I celebrate well-managed losses. Yes, losses. Because there is something powerful about walking away knowing you respected your process. Because here's what I've learned. A loss that was managed with clarity is a bigger win than a profit taken in panic. The more I do this inner work, the more I see it clearly. You can't control the market, but you can expand the part of you that meets the market, and that changes everything. You stop trying to force control and you start trading from capacity instead of compulsion. Because if you can't hold risk, you will always trade small even when the setup is big, or trade big even when the moment is small. This is not about becoming emotionless. Please don't get me wrong. It's about becoming emotionally mature, emotionally available to your own experience. So my challenge to you this new month is simple. Don't just observe your trades. Observe yourself inside the trade. Notice what your nervous system does when things go slow, when price lingers, or when it teases your stop loss order. Because that space between entry and exit is where your real edge gets forged. In the next episode, we are going to stay right here on this topic, but go a little bit deeper in the art of risk capacity. But this time around, we will shift from awareness to inner engineering. We will explore how to build risk capacity from the inside out through deeper self-understanding, nervous system training, and emotional regulation that sticks. Because awareness alone doesn't change your behavior, capacity does. And if we want to grow as traders, we have to grow as humans. Until then, trade smart, trade consciously. And hey, happy new month to you, and let this one be about capacity, not chaos.